Greetings, young Jedi. Quadruple witching day. Ready. I'm trying to get it so I can actually read the chat. Change the resolution on this screen. I think it's running. This will have to work. Good morning. All right. Testing. 1, 2, 3. Testing. 1, 2, 3. The wane in Spain falls mainly on the plains. So the ants in France stay mainly in the pants. All right. So your chat is there. The camera is there. My screen is there. All right, a little bit different. How do people survive with only 3 screens? I can't figure it out. So in the middle of trading on Wednesday afternoon, right after FOMC, in the middle of my trading, volatility going crazy, my computer died. Poof. Huh. So anyways, that's what's been going. My mic is a bit low right now. Of course it's low. It's a laptop. So anyways, so I'm waiting to get all that fixed. So anyways, I'm just on my laptop, so I only have 3 screens. But we'll deal with it, huh? Oh, it's broadcasting at 480? I haven't changed the broadcasting. That's strange. So anyways, yeah, I don't know. So anyways, let's just get on with it. 3, 2, 1. Welcome to Forex.Today. Let's go. Let me remind you that trading's risky, not appropriate for everyone. Your past performance Good or bad is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hello, hello, hello. Again, my name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Why don't you visit TradersWay.com? Give them an opportunity to earn your loyalty and respect. You're going to need a broker one day when you're trading real money, so why don't you develop that relationship now? They're trying to do that by providing education. They want you to have the skills and confidence you need to succeed. If you like that kind of partner in your corner, then TradersWay.com is where you go to start that relationship. While you're here, please ask questions, get involved, and I will do my best to help. Is that it? All right. It seems like that's it. All right. So a few people said they're having trouble with the mic. Cool. Microphone, as far as I believe, is at full. Well, I can try switching. Hang on. This is for all the people complaining about the sound. Don't get mad at me. Smart mic. Connected. See if I can connect this way. Hang on. All right. Hello? Hello? I don't think that made a difference, did it? I don't think this. No. It says I'm connected. Hello. Okay, how about that? 你好嘛? G'day, mate. How are ya? How's your mum? Cool. So you should be able to see the charts. Pretty weird. Okay. Cool, made a difference. All right, good. So let's just get through this. Let's get going. Let's take a look at the world. Okay. And MT4 is frozen. Oy vey. How about that? Just another problem. It's amazing. MT4 is frozen. Isn't that funny? So, what are we going to do? Yeah, totally just frozen. Restart it. I'm only not running very much here. My screen ain't blurry. Your screen is blurry, Pompo. So anyways, welcome to Quadruple Witching Friday. Anything that is set to expire will expire today. That's contracts and futures and options. So that's one thing that makes today a little bit unique. So I can see that you can see the screen, right? And but you can also see that it ain't moving. Yeah. So I don't know what's going on. Yes, I have rebooted, so that should be working fine. So for some reason, OBS and MT4 on this machine isn't working properly. They don't play well together. So anyways, we'll see if it catches up. I do hear the fan in the background, which is pretty strange. So it's doing something. I don't know why. It should be silent. Okay. So anyways, hey, well, let's talk a little bit. A few people have questions about FOMC. Let's see. We talked about the Fed adjusting their dot plot, which I've already prepared you for. We talked about the Fed talking about tapering, which we've done many times before. We talked about when the taper is likely to happen. Okay, we've already talked about that multiple times, and it seems to be, our guess is very, very reasonable of when that's going to happen. The Fed also talked about when they're likely to raise interest rates, and that's also a thing that you can see from the dot plot, and that also looks about right. So, summary, what happened yesterday? Wednesday. On Wednesday, the Fed confirmed what we discussed 1 year ago. Okay? Okay? Isn't that strange? Yes, Ronald had a question about the laptop. here I can do this. Hang on. Yeah, that's my laptop. Isn't that cool? So the small ones are lower res. Wow. Maybe it's Windows having problems. That wouldn't be right. Anyways, and there's my normal screen. And that's running at right, 2560 by 1440. So it's a cool little, right? Okay. Mr. Kennedy says the Fed confirmed what we talked on Tuesday, and of course the Fed's announcements were on Wednesday, but it was actually a year ago that I went through and explained all of this. And specifically for the June meeting. Okay. So anyways, look. So I don't know what to do about that. So I guess we'll just have another talking day. I mean, Jesus, Murphy, come on. I don't know why this is a problem. Seems to me if I turn off the live stream, the platform's going to work. So the trading platform worked fine before I turned on the stream. So something's going on there. How crappy, huh? Mr. Kennedy, I've run live streams before, so that shouldn't be the problem with this laptop. It's an i7, which is enough processing power. It's got a reasonable amount of RAM as well. I'm pushing in enough data, so, okay. Ronald said, did I get kicked out of a lot of longer term trades? I got kicked out of a lot of trades, but not my longest, not, you know, that would be more medium and short term. So one of the things we talked about in the live group yesterday was the euro dollar only dropped 230 pips. It's not that big of a deal. Okay? The example I gave was back in 2007, I was at the FX Street International Traders Conference, I think it was called. And back in 2000, so it was the summer of 2007, and I gave a specific date less than 3 months in advance of where we were that day. And I explained this had to do with the purchasing of short-term bonds, 3-month bonds. So I could say, well, these treasuries are going to expire less than 3 months. So we kind of guesstimated what day that was, and I think it was like September or something, right? And I said on that day, or around that day, because it wasn't a specific day, but it was over the course of a few weeks, you could anticipate when all these bonds were going to mature. See, I don't know the exact day everyone bought, so it was sort of a period in which people were buying these 3-month treasuries. Anyway, so we kind of guesstimated in the future where that would be within a week. So like I said, well, in the next 5 weeks, in particular around the September period, I think the pound yen will drop 5,000 pips. Let me restate it. Back in 2007, being recorded in front of an audience, right? I suggested that the pound yen was about to drop 5,000 pips. So we're talking about yesterday, or on Wednesday, the euro dollar moved 230 pips. Like, dude, compared to 5,000, it's chump change, right? Well, I was wrong on that trade. It didn't drop 5,000 pips, it dropped 7,000 pips. So I apologize, but my timing was great. So again, if Wednesday seemed like it was the end of the world for you, you might be either over-leveraged or over-exaggerating. Okay? So one of the things you should be focused on is knowing what you want and what you really, really want. Yes, we quoted the Spice Girls in the meeting last night. Okay? Powell, right? Wang says, hey, Powell's also mentioned that we should not take the dot plot so serious. It is true. It's never been really that important. But what I was suggesting, and one of the things I talked about in a live group yesterday, is 1 versus 2 rate hikes in 2023 and which Fed meetings they're likely to happen. And I incorporated that information in sort of the guesstimate. But I agree with Powell, you know, for the Fed members to be guessing what they're going to do in 2023 versus what information we actually have, it's really quite silly. So, right, I mean, first of all, many of them have political biases. Some will never want to raise interest rates. Some want to raise interest rates as soon as possible, and that's just that. But inside of that, they're guessing on the information, and there's two types of guesses. They're looking at the information now going, oh my God, we're going to have 7% inflation in 2023 based on what we see today. And then others are looking at it like, today the data is skewed because of supply chain challenges, you know, reflected from the COVID shutdowns. But by 2023, the supply chain will normalize. Stimulus money will have been spent. And we'll be back at, generally speaking, business as usual in an economy that has 4% unemployment. So when you get there, if that is true and you get to 2023, you won't have crazy inflation. And maybe instead of raising 2 times, they only raise 1 because they're slowly getting back to normalizing rates in a normalized economy. So all of this is quite guesswork, but the Fed already told you what they planned on doing a year ago. You can do your own research, do your own analysis, deal with the base issue, make your own calculations, plot this on your solo growth model, right? Looking at actual GDP growth versus potential GDP growth, and make sound economic decisions, or what I call sound FX decisions. And then you'll realize, oh, all right, it's not actually a time to freak out. Ronald says, so nothing more than a retracement, dollar still bearish, you think? Look, I don't think, I analyze. You don't get paid to think, you don't get paid to guess. So put it this way, Ronald, write down the things that have changed since Wednesday. Show me everything that you find now to be different than before Wednesday. So compare Tuesday's fundamental analysis to Thursday's fundamental analysis and show me the difference between the two. Okay? And if you see a radical difference in the fundamental data between Tuesday and Thursday, then explain how you're going to adjust your fundamental bias based on this data that you can show me. But instead, if you're like, well, I don't think actually anything's changed, then why the hell would you change your fundamental bias? Oh, well, the euro dollar dropped 200 pips? Dude, that's... Okay? That used to be a non-farm payrolls. Right? In fact, non-farm payrolls 10 years ago would jump 300 pips, drop 200 pips, jump 300 pips, drop 200 pips in the matter of 45 minutes. Okay? Okay? But you understand, guys? That's how you do it. You can't just say, I'm freaking out. I've decided to freak out. Like, what has changed? And if you need to change your bias because of what has changed, then consider it. But if nothing's changed, then why would you change your fundamental bias? It doesn't make any sense. Okay? Pete. Pete asks the brilliant question. Who is buying dollar? Pete, how do you know people are buying the US dollar? Okay? Anybody can answer this, by the way. How do you know people are buying the US dollar? I won't know until this afternoon, and I don't think anybody bought the US dollar. Okay? So again, Pete, who's buying the US dollar? Why do you think people are buying the US dollar? If you guys don't know, type in a question mark. So here's what I'm thinking, Pete. You see the dollar get strong, and you interpret that as people buying the US dollar. Am I right? Okay? But that's probably what you're thinking, right? The dollar's strong, so people must be buying the dollar. It makes sense to me. That makes sense. That's logical. It's not true, of course. So imagine I'm not the only person that believes macroeconomics, the condition of macroeconomics globally that we have right now, would weaken the dollar. Okay? I don't think I'm unique in this position. Okay? Not as an institutional trader. Maybe, retail might not kind of get this, but I believe, I would guess, at least 90% of professional Forex traders are short the dollar just like me. Great. We also know, and I've prepared you for weeks and weeks and weeks and weeks and weeks and weeks and weeks, that this June Fed meeting marks the end of the trading season, and we are now entering the summer holidays. And that this Fed meeting was also an important Fed meeting, that this is a key moment in time that we've been targeting since January. Okay? Okay? So here's the thing. I believe the vast majority of institutional Forex traders were short the US dollar, and they exited at the Wednesday meeting. Now, what do brokers do when you say take profit and you had $1 billion in short USD trades? What does your broker have to do? Your broker has to offset your dollar short trades. It's this equal and opposite, but it's very similar to buying the dollar to exit your dollar sell, your dollar short. Okay? What I'm trying to say is, it looks like dollar strength. It's traders exiting the euro dollar long position. Okay? It's traders exiting the USD CAD position, short position. It's traders exiting the pound dollar long position. It's traders exiting the Aussie dollar versus US dollar long position. Okay? Traders are getting out. Why? It's the time of year for it to happen. And I can plan on when they're coming back. Okay? So we don't know right now, Pete, if the dollar's strong because traders are buying the dollar, or if the dollar is strong because traders are exiting short positions. We will know in a week or two based on the Commitment of Traders report. But let me remind you all, there was a time a year or two ago where the euro dollar was going up and up and up and up and up and up. Not for days, but for many weeks. I mean like 8 or 9 weeks. The euro dollar was going up. Okay? And I could prove, and I did prove, that nobody was buying euro. And it just blew people's mind. Boom! Boom! Just mind-boggling. An 8 or 9 week rally in the euro dollar. Euro dollar is up 5, 6, 700 pips. But nobody was actually buying the euro. But everybody on the planet was selling the US dollar. Yeah, hey Gregors, yeah. Okay. So cool, right? That's cool. So I'm just like, look, before you freak out, and by the way, you can do whatever you want to do. If you want to freak out, freak out. Okay? But make sure, like if you're changing your fundamental bias, I'm cool with that. I'm not here to say I'm right. I don't know the future any more than you. Your educated guess, my educated guess. Now maybe I put more thought in my educated guess, or maybe I don't. Or maybe you put hardly any thought into yours, but it's right. And I put a ton of thought into mine, but it's skewed with experience trading 10, 20 years ago that maybe doesn't reflect what we're doing now, or maybe I have built-in biases, maybe whatever. Maybe I'm just interpreting the data wrong, but I can put a ton of work into mine and be wrong. You can put a hard lane in work in yours and you can be right. So I don't know. Okay? I don't know. But I want you to at least be able to argue your point. So suddenly if you're like, Wayne, it's all over, the US dollar is over, interest rates are going to go up. That's going to create a carry trade, and the rest of the world is still struggling with COVID, and so the 10-year T-note is going to be very, very, very attractive, and the U.S. stock market's going to come down because everything's overvalued, and the U.S. dollar is going to be strong for the next year. Cool. I don't know if any of that's true, nor do you, but you could have your thoughts, your biases, your experiences, your research, okay? Okay? Cool. Good. Fine. Be a dollar bull. Okay? But you have to be able to explain why. What is the mechanism that will create the dollar strength? I can explain, and I have 100 times before, the mechanisms that will create dollar weakness. Right now, you can take all of that and just throw it out the window. Because starting today, in particular today, starting today, quadruple witching on June, we are about to lose volume and volatility. And because of the lack of volume and volatility, macroeconomic trends are going to wane. Okay? So, for the next 8 weeks, let's say, we are going to trade less fundamentally, more technically, less position, more swing, more day trading. And I explained this in the swing trading group. And by the way, if I keep saying that, like I explained this yesterday in the swing trading group, and I explained this the other day in the swing trading group, and 2 weeks ago, 3 weeks ago, 5 weeks ago, we prepared for this in the swing trading group, then why don't you join the swing trading group? Just a hint, wink, wink, nudge, nudge. Kick down, come clean. Don't be a holdout machine. Okay? Well, one of the things we talked about yesterday is our shift to more relative strength trades. Cool. Okay? But the thing is, we're planning on this now. We already know our expectations, right? And our planning and our adjustment to strategy moving the next 8 to 10, 12 weeks and forward. And then we know how we're going to shift strategies again, shift our expectations again, shift our setups again, and make completely different decisions in our trading, and why. So we're already changed what we're doing today versus what we did a week ago, how long we're going to shift in our technical, tactical strategies, how we're going to shift yet again in the near future, and we already have targets, psychological targets, if you will, for November, December, and January. Okay? So we're already thinking that ahead. We used to act this way, now we're not going to act that way. We're going to act a different way. We're going to do that for a while, and then we're going to stop acting that way, and we're going to shift yet again to a new way, and that new way is going to last a certain amount of time, and then we have to not only just shift what we're doing, but reverse what we're doing. So yeah, in some ways you could argue we're 27 weeks ahead. Okay, isn't that cool? Let's see if yeah, this is just bombed out. Okay, so long story short, don't freak out. Don't freak out. I wonder if I have MT5 on this one. No. Web searches, no. Sangam says, what about the Reserve Bank of India? What are they doing with the gold? Well, they don't have to do anything with it. Just leave it on the balance sheet. I never said that, Stephen. Yeah, so this, again, stalled out. I'm quite sure if I stop streaming, MT4 here will start working again. Lovely, huh? Lovely. Lovely till you mum. Wonder if I can delete a few things on the stream and see if it'll work better. Just getting rid of stuff on here. The fun stuff, we'll get rid of that. Game capture. Why is there a game capture? Video capture we probably need. Someday, when you're all alone and your world is cold, I will think about you. Alert box. Let's get rid of that. Just seeing if I can get this stream to the bare minimum. If maybe it won't bother things. Browser source I'm going to need. Header going to need. Chat box is fine. Webcam, keep. Viewer count, webcam. All right, well. Well, I need a stream source. ugly with your smile so worn and your teeth so green. All right, are we back? We got a little bit of movement. Jim's like, yeah, maybe because you ain't talking, brah. All right. How you smell? What do you stink? All right. So we got something moving here, huh? Okay, we're about middle of the range. Can we confirm you have sound? It looks like you have sound. Yeah. Oh, okay, so there's like a good 30-second lag. All right. All right. Well, that's going to make everything super fun. Let's get to the important parts first. We are at key pricing levels for a few dollar pairs. One of them here is our USD Kitty CAD, where we're approaching the sell zone. Okay, current price about 24. Selling can take place all the way up near 25. What do you think? Are you going to sell around 25? Are you going to sell around 24? Are you going to sell? Okay. What do you think? What's your plan? What's your long-term vision for the Canadian dollar? Do you have a long-term vision for your Canadian dollar? How do I know if the markets are buying the dollar? Frey, it's called the Commitment of Traders Report, and it's available at Forex.Today. But it won't be available till the end of Friday, next Friday, because the CFTC gathers data by the end of business on Tuesday, compiles the data and releases it Friday after the close of the market. So to get the COT data for Wednesday, we have to wait next Friday. You got to remember it's government work, so they're not really interested in accuracy or speed. Okay? Okay? The bigger issue is, in this case, what do you want to do with the kitty CAD, and why do you want to do it? Okay? That's all. Now, one of the things we could have covered today, and I don't want to mess with things too much now, but commodity prices have started to come down pretty hard. So put this on your research for the weekend, okay? I want you to look at futures prices for things like lumber and how about wheat, grains of some sort. Okay, wheat's probably a good one. Okay, and think about how that would impact inflation in the future. Oh, my pleasure, Frey. Remember, Forex.Today. And at the top of the screen, it'll say COT data. Okay? Data. Commander Data. Okay. So anyways, I want to point this out. Kitty Cat's in an interesting place price-wise. Might not be the right time, but we're in that zone. A technical zone, however, that might be interesting. Okay? Doesn't mean it will be. It just, usually it is, but right now we have a fundamental change, so the technicals are less important, but it is what it is. Euro dollar is also on a key price. This is an important price. Okay? Now, once again, don't apply your regular technical analysis and say, I must buy this because it's S2. Well, this price is based on what happened in May. So what kind of mumbo jumbo are you trading? Oh, well, based on what happened back in May, this should be a good price. If you add up the high, the low, the close, and divide it by 3, and then add this, and then subtract that, and then divide that by 2, you will get this important number. Dude, who cares? But Wayne, you love pivot points. I do love pivot points, but I like making decisions too, right? So the Fed meeting has nothing to do with your lines printed on your chart based on calculations of what happened 4 or 5 weeks ago. So remember, Forex is not Fortnite. It's not a video game, okay? So you don't just wait for that price and then go, do. Why did you do that? Oh, well, I'm on my monthly M2. No, you have to think a little harder than that, okay? If that would work consistently, then someone would just program an EA and they don't need you. They're certainly not going to pay you 20% profit and 2% management fee if you can just pay $20 for an EA that'll make you rich while you sleep, okay? So instead you have to say, all right, yes, this typically is a decent price. Yes, there are probably traders and investors that are watching this same price too, but I must confirm using price action that this is even relevant. And you should also anticipate low volume and low volatility for the next several weeks, which means your technical analysis will be less reliable. Is it useless? No, I never said that. But you're assuming new types of risk that didn't exist a couple of weeks ago. Well, a couple of weeks ago, half the market left. You saw the consolidation. You remember that, guys? 2 weeks ago? Right? 2 weeks ago? The market was sideways for weeks, 2 weeks in a row. What does that tell you? People were leaving the market. Okay? Then the FOMC meeting came out and the market dropped, except the stock market went up and the commodities market went up. What does that tell you? More foreign exchange traders left the market. So now if, let's say, half the market's gone, maybe more, who's going to follow on your swing trades? When you scalp, who's going to follow on just after you to get you to your target? Half the market might be gone. You might pull the trigger and then you sit there and go, oh my God, nothing's happening. Or you're in a half decent trade and you're like, oh man, 90% of the time I go for the R2 on a trade like this. And then you only get to R1. You're like, R1, that's not even M4. Like, how come it's wimping out at R1? Because you and 3 other people are trading. And apparently, if 2 people trade against you, they kill your trend. Okay? So we're in a different world. We're in a different market. We're with different market participants trading for different reasons or not trading at all. And you want to trade like it's February. You want to trade like it's October. I'm like, dude, that doesn't make any sense. Okay? So you need to adjust. And by the way, if you were in my, live streams 10 years ago and even 20 years ago, it's the same message. That you simply have to adjust your strategies, your tactics, but most importantly, your expectations for a changing market condition. That's why I use the 2155, and that's why I use the 58. I used to explain it. I used to stand on stage and explain that based on this information, you must adjust your expectations for your trades because market conditions have changed. If you're kicking off a 55, the market condition has changed from very bullish to moderately bullish. You must stay bullish, but you also need to be less bullish than you used to be. Why? Technically speaking, market conditions have changed. Therefore, you must change your expectations. That's the whole point. Okay? Okay? Cool, right? Cool beans. So this is typically an interesting price, so you should not ignore it. But if you buy it because it's M2, you're not trading properly. You can do it, of course, ideally with proper technical analysis. So you drop onto a fiver and you say, ooh, I'm going to buy there, okay? But then you must manage it as a higher risk trade. So for example, let's do a basic quiz right now. If I'm a bull, should I buy this now? I'm a bull. We're at S2. Should I buy it? The word is should. I can. Do I have to? Well, right now, should. Should I buy it as a bull? Type in a question mark if you're not sure. Drum roll, please. Should I buy it? I'm a bull. Should I buy it? Okay. I'll give you a hint. I discussed this, I believe it was Wednesday or Tuesday, and I told you the story of me being at a Pete's Coffee near the Franklin Templeton World Headquarters, next to the Foo Whole Earth's grocery store, with people buying flaxseed oil. Remember, I even used that lisp. I like this. Is this flaxseed or sustainably harvested? You remember that? Now, why do I do all these jokes? Why do I tell you it's a Pete's Coffee? Why do I tell you I sat in the room at the back? The little bench next to the window. Why do I tell you there's a Whole Foods store and that it's where people go to get their organic flaxseed hand crushed by monks into oil so that they can pour it into their ponytails and rub it into their goatees? Okay? Why do I visualize like that? I'm trying to get you to remember. So let's go to a basic, okay? Basic. I said I was a bull, okay? Well, in the story with me and the Pete's Coffee across the street from the Whole Foods in San Mateo, California, as I said, I came up with a name with that gray area. Did I call it the buying zone? No. I did not call it the buying zone. I called it the pivot profit zone. And if you extrapolate what that language means, in the English language, that means bears exit for profit. So you can, but that's not the point. The second point I want to make is that there's nothing on this chart that we're looking at now. Maybe I'll back out a little bit more. Okay, there's nothing on this chart that says up. You understand? The first thing I ask you to do is confirm market conditions with your fundamental bias. I've been saying this since 2004. Are you a bull or a bear? I'm a bull. Okay, I've made that declaration. Good. Are market conditions bullish right now? No. No, it is not. Okay? What did I tell you guys I would be doing today 100 days ago? What's my plan today based on what I told you 100 days ago? Think about it. I mean this day, the Friday after the Fed meeting. What is my plan for today? I have a cabana booked at the country club pool. The whole cabana. So I have friends and family going over there. There's probably going to be, there's going to be 7 of us, but my daughter very often brings a friend. There could be about 8 or 9 of us in a cabana. It's a big cabana. We're going to have food and drinks and margaritas are going to be flowing. And I told you this 100 days ago, okay, that I'm going straight to the pool and it's margaritas because today is the first day of summer. I planned on it, okay? So I'm looking at this. Does this say up? No. It says in normal market conditions, a bear would stop selling. Okay? Now, by the way, I am not going on holiday. I am sending my wife and children to the beach for a week. Okay? They're literally going to be on the beach. I am going to hang out here with you, and I'm going to work on some training courses and stuff with you guys. I just need a break. I don't want to take care of anybody but myself. I don't want to have to run around and do things. I don't want to hang out at grandma's house for a week. I don't want to do this. I don't want to do that. I'm going to drink wine and smoke cigars. I'm going to drink coffee and smoke cigars. I'm going to trade and smoke cigars. I'm going to do PowerPoint presentations and smoke cigars. Oh, and I might take the dog for a walk. Okay? But my point here is, this doesn't say, oh my God, I have to buy this. Can you buy it? Yeah, I get it. But what are you actually doing? You are actually counter trend trading. In my book, it says it's twice the risk for half the reward. Can you do it? Well, you know what? I bought Aussie dollar yesterday, and I lost 33 pips. And I don't think I'm going to cry about it. Okay. Of course, I did it on my trading rig behind me. Wow, did it really move that far? Holy crap. All right, so that's pretty funny. I bought it in here, and I was doing all right for a while. What is that, 75.50? Holy crap. So anyways, I got on a long time ago. And that shows you exactly what I mean. It's not a buy. What that says, in normal market conditions, that is a price in which a bear should stop selling and ideally take profit. But as we know, the Wednesday Fed meeting, when the Fed for the first time said, we we started thinking about tapering. Okay? Also, if you compared the Fed statement with the previous Fed statement, which I did. Dumbass said, what? Yeah. I took the new statement, I took the old statement, and the biggest change in the statement is they took out all the language about COVID. COVID is no longer a drag on the U.S. economy. COVID what? COVID who? Okay? It's over. Okay? So this is new information, right? And based on what they told us, they confirmed what we discussed a year ago, so now we can say green light. Okay? But my point is that gray line, that gray area, which is normally a pretty reasonably important area for us, is not as important as it normally is because it's different. That has to do with seasonality. Gary, I took that trade too, right? I took that trade. It was more like I had the price, and at the time it was fine. And for the 8 hours I was in it, I was profitable or break even. I can't remember if I moved my stop or left my stop, but it was a small trade. And it was more like, well, let's see, because it's more like if it holds, the other things are going to go. Because I'm not bullish right now on the Aussie, and I'm definitely not bullish on the Kiwi. Okay? Okay? Leonardo says that I said I'm bull on the euro for a decade. Well, that's not 100% accurate. Even if I had said it, what I meant is, okay, I'm a bear on the US dollar, and the euro dollar represents 40% of the entire Forex industry. Okay? So if the Forex industry is $6 trillion a day, 2.5 trillion of the 6 trillion is just euro dollar. So with that being said, if I'm selling the dollar and almost half of everything is euro dollar, then by consequence, euro's going to go up. That's all. I don't really give two hoots. I think the euro sucks. I think the ECB is impotent. And it's not their fault. It was the way it was designed. But it's just going to go up. Okay? Okay? So Famobix says big fundies are taking profit. Well, they already did it. Okay, yes. Yes, they already did. Now, we don't know for sure, though, Famobix. So in 10 days from now, not Friday, but the following Friday, so I guess 7 or 8 days from now, we will get the commitment of traders report that will confirm or deny our hypotheses. That's why I use scientific methodology. I can make certain assumptions and I can tell you what might be creating this price action, but I won't actually know for a week to 8 days. Then we could look at the commitment of traders report, and what I imagine I will see is exits on dollar bears. Okay, so for example, you will look at the euro commitment of traders report. Remember, they're priced in dollars, so if you're looking at euro, you're looking at euro priced in dollars, euro dollars, okay? What we will see is a significant exit by the bulls.
Maybe some bears sold. Maybe they moved over from bulls to bears. Maybe. But the most important thing is if there was 100, let's say there was 1,000,000 contracts long euro dollar, and suddenly now there's only 600,000 or 500,000 or 400,000 contracts open for euro long, then we know a big chunk of the market went away. And that would explain the strength in the dollar, because traders are exiting euro bullish trades, exiting the euro position, and buying back their dollars. Because remember, they used their dollars to buy the euro. Dollar weakened, euro got strong. That's why they're bulls. And then suddenly they hit the June Fed meeting and they're like, you know what? It's summertime. You can have your euros back. Give me my dollars back. Okay? So they sell their euro, buy back their dollars, and go on vacation. Wait. That means they sold the euro and bought the dollar. Euro dollar fell. But were they actually buying the dollar? No, they were buying their dollars back. Does that make sense now? They traded their dollars for euros. They rode the euro up. They're bulls. And then they get to a point in time where they're like, you know what? Give me my dollars back. But that's not them buying dollars. They traded the euro that they owned temporarily and bought back the dollar that they permanently own. You see? They're just like, give me my money back. So it's just going back to where it was. Okay? I hope I use butter and olive oil on my veggies. By the way, I made this thing. It was giant pieces of portobello mushroom, 2 or 3 different types of bell pepper, and onion, and one other thing. Zucchini, big chunks of zucchini. And I made a huge, I had to do it in 3 batches in a big wok. Oh my God, it was so good. But it was all olive oil to start, and then butter to end. Yeah, my friends do hydroponic, and it's crazy. It's crazy good. Their hydroponic garden is just nutso. It's one of those vertical ones, giant lights everywhere. It looks like they're growing pot in their house, but no, they're growing tomatoes and such. So let me ask you, was that a helpful explanation of why, for example, the euro dollar could fall and nobody is actually buying the dollar? Like, they're not actually selling euro dollar. They're simply no longer buying euro dollar. Yeah. Hope, one of the things about having a reasonable amount of money is you spend more money on food than people spend on rent. You buy nothing but good food. You know, I made hamburgers the other day out of Wagyu beef, right? You buy organic plants that have been sustainably harvested, right? With low pesticides and all that kind of stuff. It's just, you can afford to buy good food, right? When you make money for the first time, I'm telling you, the best investments are things like buying a quality bed, right? Buying a quality bed is such a good thing. Buying good food is such a wonderful thing. And then, of course, when you can, change your neighborhood, change your friends. Get rid of your friends, get rid of your neighborhood, and move on up to the east side, right? Okay, why are you not bullish on Aussie Kiwi? That's what we will be doing the next few weeks, is focusing not on fundamental trends, right? But on relative strength. Man, that is slow. So you would do things like look at Aussie. Yeah, that's right, Hope. You know, like, I don't know if I'll do it this time, but I think it was 2 years ago, I sent the wife and kids on vacation to the beach. So, you know, I don't necessarily like vacations. So anyway, so I sent them to the beach, and I dropped my calories. At first it was 1,000, and then I dropped them to, like, I think I was eating less than 500 calories a day. But I'd get like tuna, a can of tuna, and I had put a raw egg in it, and a couple of squirts of Thai red chili, right? Just scramble that up in a pan, and I would eat that. I'd have one like every 3 hours. It was great, but it was like 75 calories or something every time I ate. Every 3 hours I'd have 75 calories. And so I don't know, it was really less than 500 or 600 calories a day. And so my wife comes home and she's like, "Do you feel all right?" And I'm like, "Yeah, I feel great." She's like, you look sick." I'm like, "Well, I lost 18 pounds while you were gone." She's like, "Wait, I was gone a week and you lost 18 pounds? I don't know if it was 18 pounds. It might have been 8 or 10 pounds. And she's like, "You lost 10 pounds while I was gone?" I'm like, "Yeah." So anyways. All right, so did this change? Yeah, it did. Okay. Macronutrients. Yeah. Well, it wasn't that I was counting calories, but here's the thing that I was intrigued about. I got to the point in just about a week where 1,000 calories seemed like way more than enough. I'm like, 1,000 calories? I'm like, gee whiz, I'd have to be eating every 2 hours instead of every 3 or 4, right? So anyways, I thought it was interesting because I'm sure I eat more than 2,000 calories a day, although I'm a pretty decent eater. Okay. Daniel slept in the river. Is that right, Hope? No, it's just interesting. I got a few calories on my belly. So anyways. All right. So what are we doing here? First of all, I can't find my decent glasses. Do you mind if I wear the dollar store glasses? It's funny. I don't even know where these came from. And then I don't know where my nice Tom Fords are. Hang on. Yeah, well, if one thing describes me, Charlie, is ripped. That's me. All right, so I'm going to start here. Aussie. Okay, good. All right, so the top three have Aussie on the numerator. For those you have forgotten high school, numerator means on the left or top. So if Aussie was week, the top three currencies would have the Aussie dollar falling. This is cool because I ran the MetaTrader's auto installer, but not the new version. But I'm like, this is pretty good. I'm telling you, just for me personally, having created MetaTraders, this idea now that I can, open up my laptop, install MT4, run the auto installer, and I'm in business, I can't tell you how happy that makes me. Compared to the years and years and years of having to rebuild things, or, every time you buy a new machine, you got to install MetaTrader, and then you got to install or then build all your things out. And it's so great. Okay. Okay, so if in the top three only, if the top three are falling, try to make sure they're the same time frame, hour, and give it the same amount of clicks, then the Aussie dollar is weak. And in the bottom two, because Aussie's in the denominator, or the right, if these pairs are going up, then the Aussie dollar is weak. So for the bottom, up means weak. For the top, down means weak. What can we conclude by this? Australia, right? The Australian dollar is weak versus everything. Cool. That's why I'm not a bull on Aussie dollar. Oh, but we're at the S2, Wayne. Who gives a darn? I don't buy things because of colors on a chart. I'm the boss, not MacD. I'm MacD and I get respect. Your cash and your jewelry is what I expect. MCA is with it, and he's my ace. So I grab the piano player and I punch him in the face. Piano player's out. The music stopped. This boy had beat, but he got dropped. Just for those from the 80s. All right. So what do we know? Aussie's a dog with fleas. Cool. What else can we conclude? Well, the steepness will tell you how strong the other currency is. So USD is fairly strong, right? It's nice and smooth, riding the 21. Great. The Aussie CAD is less smooth, but the velocity has increased quite a bit in the last few hours. Aussie yen is very, very smooth, very similar to the US dollar. So we know the yen is strong, the dollar is strong, and actually CAD is quite strong. All those are quite strong. Now I look at the pound, and can you see how the pound dropped below the 21? It's not riding the 21. 21 got breached. And are we making lower lows? No, we're testing a double top. So that tells me pound is also weak. And euro has been riding the 21 beautifully. So, a major conclusion here. Aussie is very weak, and pound is almost as weak. So if you wanted to sell things today, you might want to sell pound, but you definitely want to sell Aussie. Okay? Now, we can insert okay. Okay, do you like that? That's the standard template. Now, let's go template, scan, and there we are. Gut, gut, ist gut, ja, ist gut, ja. Das ist gut. So somebody says, why don't we trade Aussie Kiwi, I think it was, right? I'm like, that looks dumb to me. First of all, there ain't no trend. And second of all, the only thing as weak as the, so far the only thing weaker, even close to the weakness of Aussie, is Kiwi. And Kiwi looks weaker than Aussie, so that would be terrible. That would be a terrible trade. An absolute disaster of analysis. So right now we've learned three things. Sell Aussie, sell Kiwi, sell pound. And that's probably enough. And what do we know is strong? Well, probably dollar, probably yen. That's all. So maybe you sell Aussie dollar, maybe you sell Aussie yen, maybe you sell pound dollar, sell pound yen. Sell Kiwi dollar, sell Kiwi yen. And that's probably how we're going to work for a while. But we still cannot throw out medium and longer term analysis. What I described in the live group meeting yesterday, in the swing trading group, is that you need to know when you are trying to get on base, and you need to know when you're trying to hit a home run. Okay? The sports analogy besides baseball that I used yesterday was golf. Here's my strategy. I'm going to play it very safe and very conservative on the par 3s and par 4s. I'm not going to hit hard. I'm not going to crush the drives. I want to hit fairways. I don't want to go for the flag. I want to go for the center of the green. I'm going to two-putt and walk away with a par. I'm going to let everyone else make the mistakes. But when I get to par 5s, I'm going for birdies because I want to win the tournament. And on the par 5s, I will long bomb it. I'm going to go for 300 plus. And when I have a shot to the green, I am going for the pin. Because I want to have an easy 12-footer, 10-footer, 6-footer tap in for birdie. Okay? And the rest of the time I'm going to play it safe and let everyone else make the mistakes. But I'm going to try to birdie the par 5s. So I have a strategy, I have a plan. I want to win the tournament, but I don't want to lose the tournament. You see? There's a difference, right? Being aggressive on every hole, I might get some spectacular shots, but I could have some very disappointing shots too. Too aggressive, too much, all the time. Okay? But I do want to win, and I need birdies to win. Okay? So I'm going to have to choose when am I going to be aggressive and when am I not going to be aggressive. And that's how we're going to play the summer. So you better have a strategy. Know which trades you're going for 300, and which trades are only 100, which trades you're happy to pick up 50 or 60. Okay? Okay? Cool, right? All right, well, have a wonderful weekend. Welcome to the summer trading season. For the next several weeks, I will still be here with you, but we will have to change our expectations and change our tactics. But don't be fooled. Some people will tell you that you cannot trade and make money over the summer, and that's absolutely ridiculous. You can trade, you can make money over the summer. But like I said, you have to change your expectations and adjust your tactics. That's all. Okay? So I will be here on Monday. I will be here on Tuesday, Wednesday, Thursday, and Friday of next week. Even though my family will be at the beach, I will be here with you. So please consider subscribing, and please click the like button. I would like it if you could tell YouTube that this is quality content, and maybe they should promote it to people interested in trading Forex without the get-rich-quick bullshit.